Hello everyone, and welcome to a special midweek report today. At almost exactly 3 p.m. Beijing time, a curious event unfolded as a major Chinese national holiday commenced, celebrating the founding of the modern republic. The markets for gold and silver experienced a sudden and significant sell-off. This wasn't a minor dip. Gold plummeted by over $70 from its daily high, falling below $3,800 an ounce. Silver followed, retreating from over $47 to under $46. The timing was impeccable, and the move was violent. It left investors worldwide asking a single, urgent question: what is really going on with precious metals? To understand today's event, we must look back. Since late August, we've seen clear signals of major institutional players entering the precious metals arena. The Saudi central bank taking a stake in a silver ETF was a major clue. The result: silver has surged over $7, and gold has climbed more than $400. But this influx of big money doesn't mean manipulation has ended. In fact, it's the very reason it increases. What we witness today is a classic tactic. When institutions are not yet fully positioned, they create the illusion of selling pressure. They use fake sell orders, often with the help of bullion banks, to artificially drive prices down. Think of it like this: if you're selling a car priced at $18,000, a competitor could flood the market with fake ads for the same car at $15,000. You'd be forced to lower your price. The competitor then buys your car at the discounted rate and removes the fake ads. The price then rebounds to its true value. This is precisely what happens in the silver and gold markets. Banks like JP Morgan have paid fines for this very practice. Some might worry this sell-off signals that the rally is over, that big money is taking profits. The data, however, tells a completely different story. Let's take billionaire Ray Dalio, who publicly advocates for a 15% allocation to gold. If we analyze his actual portfolio, we see that only about 1.4% is currently in gold. Similarly, his allocation to mining stocks is minuscule. These are not the actions of someone who believes the run is over. This is the behavior of an investor who is still building a position. The evidence is clear. Major institutions are not selling. They are still in the accumulation phase. They are using these orchestrated smackdowns to buy more at better prices before the next leg up. So, how long will this current manipulation cycle last? Based on the pattern and the catalyst, the Chinese holiday, we can expect this artificial pressure to subside no later than Thursday, October 9th, when Chinese markets reopen. The manipulators seized a moment of thin liquidity to maximize their impact. Once full market participation returns, the natural upward trend, driven by fundamental demand, is likely to reassert itself. This is not the end of the bull run, it is a strategically timed pause. Now, let's address the critical question on everyone's mind: what comes next? My long-standing target for silver by 2026 has been $60 an ounce. AI technical analysis tools concur, suggesting that a break above silver's all-time high could propel it to a range of $60 to $65. However, the journey will not be a straight line. We should expect volatility, including potential pullbacks of 10 to 20%. A key level to watch is $50 an ounce. But here is the most crucial part of this message: do not expect a massive 2008-style crash. The financial system's rules have changed. The Fed now backstops banks, removing the core mechanism that caused the 2008 metals collapse. Therefore, my warnings about pullbacks are not for you to wait on the sidelines. They are for those who are already buying on a schedule, to prepare them so they don't panic. If you believe the target is $60, buying at $46 is a strategic move. Waiting for a perfect entry at $42 might mean missing the boat entirely. The goal is to secure your position before the larger move, not to time every minor fluctuation. This special report was brought to you by Investing.com's powerful market analysis tool, Investing Pro. I use it personally to track my mining stock portfolio, compare valuations, and access data-driven insights, like the portfolio details of investors like Ray Dalio. It's an essential tool for anyone serious about navigating these markets. If you'd like to supercharge your own strategy, use the link in the description to get a 15% discount on the Investing Pro package. Thank you for tuning in. If you found this deep dive valuable, please let me know in the comments, and I'll work to bring more content like this your way. Remember to take care of yourselves, and take care of each other. I'll see you in the next video.